today we have Mr. Sanjay, who is the moderator of the session, and Mr. Tamal. So he's going to be our speaker for today. Over to you, Sanjay.
Thank you, Akansha. Before I get Tamal, for which I think all of you are waiting for, let me just quickly introduce you to Tamal. I don't think he really needs an introduction, but essentially, my story with Tamal goes back about 5 or 6 years back when I had first thought about writing a book. It was actually going to be on NPAs, which I believe Tamal is now working on. I ended up writing something else later on, but I have one of the best in this world fans as a ideas across macro and so on. And I am sure you are aware of the number of books that he's written. So he's a celebrated author. He's also a fantastic interviewer. And those of you who may have attended the annual banking conclaves and other such events, where Tamal very, very skillfully talks to the the big and mighty in the banking sector, the regulators, and gets them to talk about things that they would never ever otherwise talk about. It's really a treat to watch. So we're really, really happy for Tamal to have joined this first of the dialogue. The way this will work is for next 20 minutes or so, I'll be taking this through a few questions, and Tamal, you're free to go extempore as well at any time. We will have Q&A, as Akanksha mentioned, based on things that are put on the chat window, depending on how much time we have. So if you have any burning questions that come, please put those on the chat window right away. And so with that, welcome, Tamal. Thanks once again. While we get started, let me just start with a brief question, not specifically on COVID to start with, but how was the world in your view before COVID started? So slide back 3 months back, the world was looking great. It was one of the best times that ever was. Equity markets were great. The credit was obviously in what it was. How have we entered this has obviously a great bearing on how we'll come out of this. So maybe if you could start from there. Thanks.
Yeah. Hello. Can you hear me now? Hello.
Yeah.
Can you hear?
Wonderful.
Sanjay?
So glad you're back.
Can you hear me?
Yeah, we can hear you. I'm glad you're back in.
You were asking me about the global view. I don't have, but in India, I was not very sure that we are exactly in a very happy situation even before COVID. I'm talking about the financial world. No, credit growth was not happening for multiple reasons. There is no demand for investment. Corporates were not investing. There are, barring a few road projects, there was hardly any project which the bankers were talking about. Much before COVID, one of the rating agencies came out with a report saying that our credit growth would be multi-decade low. And ultimately, of course, we saw on March 31st, it's about 6% credit growth. And we can blame it to COVID because typically last month, banks do window dressing and go out of their way to build a book. That never happened. So that was on the banking and investment side. Stock market was, of course, going up. But everybody was waiting that and watching that something should happen. There was no, I would say, reason for the way the market was going up. Because if you had seen the consumer demand was tapering off, whether it's even before COVID, if you see all the high frequency numbers, whether it's auto loans or two-wheelers, bank credit, everything. So RBI, that's what RBI in February, they very clearly said that the space continued with the accommodative stance and they would do whatever it takes, so on and so forth. So definitely we are not in a things were not hunky-dory. And COVID has come as a big blow. So things are now, every agency now going out of their way to how much to bring it down. Yesterday, State Bank of India came out with their GDP number. They are little charitable, better than others. But if you see Goldman Sachs and others, somebody is talking about zero, somebody is talking about negative. State Bank is, I think, 1.5%. So to cut a long story short, we were not exactly in a very healthy situation, and so that COVID has dealt a body blow. That's not the scene. We are not in a very good scenario, on the economic front and the financial sector front. And COVID has come, which has actually made far more worse. That's it.
Yeah. So thanks. I think we're right at where from onset of kind of was very good times at the beginning of 2020 to something which is a full-blown crisis like the world has never seen before. So how do you see things really have played out before we come to today, and how we look at future? And there has been a great set of announcements by RBI governor just today as well. We'll talk about that in detail, but how have you seen the things play out? You talked about the credit growth numbers. We actually have a sense of what those numbers are sector-wise, as well as heat map-wise across the country, given that we are one of the largest supply chain trade finance network. So we have that data, and we'll kind of put that up during this at some point. But how do you see the way this has played out in the banking sector on the way down in last few months, in terms of if you have any sectoral breakdowns, banking, non-bank, NBFC, MFIs, tertiary sector, last mile supply chain, etc., etc.
The things have played out. There are two parts to it. One is what Reserve Bank of India has been doing and what the government has been doing. There are two legs to that. And second is, whenever you are looking at our story, you are always looking at other developed market stories and other emerging market stories, what is being happening elsewhere. So there's a continuous creep among us that we are not doing enough. We are comparing with what is US doing, what is Japan doing, what is Malaysia doing, so on and so forth. So we have a government which is extremely conservative. I think it's more the approach by the government is more sort of approaching it from the social point of view, which this government is very good at, because we have a great orator in our Prime Minister. We have never had more popular Prime Ministers than this. So he can reach out to the heart of the masses. I think all this platform he has been using primarily is a sort of, to reach out socially and asking people to do things. But when it comes to economic package, we are nowhere close to other countries. I'm not getting into the numbers, like how much percentage of GDP others have spent and how much we are doing. We spoke about 1.7 trillion, but that's also not the right way of putting it, because part of it was actually been front loaded. Part of it is in the terms of food grain, which has been in FCI and etc. So netting off, the analysts say it's actually not more than 75,000 crore. So which is a few basis points of our GDP compared to what the other developed market has been doing. So government, that's the issue, the continuous creep about what the government is doing. As per the Reserve Bank of India doing, I think it's, again, people are comparing it with US Fed, what they're doing. US Fed has opened a window and even buying junk bonds, of course, through an SPV where government has a 10% stake. So the up to 10% is the government's problem. The rest of it, the Fed is taking care of it. So if you compare that, Reserve Bank of India is not doing this. But overall, we must give the due to the devils that it has been pretty sensitive, including today's thing. So it is thinking, it's a lot of thinking, getting into a lot of discussion, a lot of consultation, and ultimately it is coming out with a package which is par for the course. What they did in March, advancing the monetary policy, and today also we have a monetary policy. Why, we'll talk it later. So all these things, the creep is that it should have come faster. Why is it waiting? That's the one way of looking at it. But RBI is doing its dues, and RBI is categorically saying that it will do whatever needs to be done. So it's not that a done deal and it's off. It's not a one-off or two-off cases. It's ready to do. And governor ended today's thing is this. He sees clear policy space for policy actions. So I would think that we have a pretty sensitive, not very aggressive if you compare it with US Fed or Bank of England, but we have a pretty sensitive and Reserve Bank of India, which is meeting the needs of the hour for financial stability and forcing the banks the way. Forcing is not the right word. I think nudging the bank to go for credit and taking care of. So both the financial sector stability and the economic growth are on its mind. But the complementary fiscal measures we have not seen from the government as yet. I'm sure government also will come up. It's not that they don't want to, spend all the bullets at one go because it's a long haul. But till now, till today's announcement, things are pretty gloomy. There was a lot of confusion on the past moratorium. Who will get it? Who will not get it? There are various kind of interpretations. So things are not happy at all, if you say, because business has come to a standstill. Everybody wants to stay liquid at this point. If you ask me, the two critical trend in the past 1 month or so, you've seen that. One is this: everybody wants to stay liquid because they don't know what's coming tomorrow. And second is the force is on technology. You will see that there are a lot of, even those banks which are not particularly tech savvy, now they are going out of their way. You can open their FDs and you can your savings account on a limited KYC for the time being, and it can be revived with the full KYC when the normalcy returns and all. So I think like demonetization gave a big push to technology. This social distancing and home confinement is also forcing us, even a person like me who is a technology challenge, to get into technology. And banks are also coming out, because banking will never be the same, the physical format. You will never see the pensioners are making a sort of mela on a particular day or days in a bank branch, because COVID, they are the people, the senior citizens are more susceptible, so they will be scared, they will not go. So even those senior citizens who used to see bank branches as a sort of social gathering place, they will stop going. This is only on one example. So the way banking is done, I think it needs to change. I'm talking about the logistics of banking, and I'm already seeing the kind of new instruments, etc. Banks are coming out. So the two trend is, if you ask me, one is staying, preserving liquidity, stay liquid because you don't know what's tomorrow, and reach out to the customer or encourage the customers or entice the customer, onboard them on technology platform. Now, as an offshoot of that, of course, the cost of operations will go down, but that's a separate story. Today is not the time to discuss that.
Yeah, I think you talked about a lot of very, very relevant things, and the graph that I have put on the screen just shows how the credit demand in the period of lockdown has really come to a grinding halt, especially in the discretionary sectors, which are essentially non-essential sectors, as have been defined. Now, the definition of essential and non-essential has been, I believe, been doing a big tug of war between various players. But if you see, FMCG Pharma has seen a somewhat of activity going back to even the lockdown days, but others are continuously coming lower and lower. And when we talk about the future, this will kind of become relevant.
Sanjay, the slides are the graph.
Oh, okay. The slides are not clear. Okay.
You need to click on the present now at the bottom right corner, and then they will show.
Okay. Okay, I'm also as tech challenged as Tamal is. So Tamal, you have a company. Let me just straight go to the next question rather than boring you with slides. We'll put across the slides later on. The only thing that I think you talked about US Fed and other central banks, Germany, Japan, going all the way to significant stimulus, not having seen something like that from World War II, and in some cases even before. I think the only thing that US Fed has not talked about buying is, I think, probably equities. Leaving that aside, I think we probably, hopefully, far more sensible, which could be more aggressive, but we just don't know how this plays out. So looking at it from this point, which we hope that it's a low point at this point of the cycle, the number of deaths, I'm sure all of everybody is looking at the spread, the R0, the transmission rate, etc. Hopefully, we are at the lower end of this cycle. We don't know how the cycle comes back, second, third cycle, etc. Mutations. These are all things which are far away from the world of finance, obviously, which are going to impinge on the world of finance. But hopefully, we are at the low point. And with the steps taken so far by the regulators, Tamal, including today's announcements, etc., how do you see the banking system recover in the coming months? I wish I was able to show the graph of the red zones versus the credit, which is currently out by the from the RBI data. What it shows is that wherever there is high wherever there is significant deaths, and that's qualified as red zone according to Home Ministry, the correlation of that with the credit is quite high, and that's a big challenge. So we'll put across some graphs. But how do you see the announcements today and others? Hoping, do you see those being able to reflate the economy as is expected, because everything is coming to a grinding halt? And while we open either on 28th or 30th or 3rd May, hopefully not beyond, do you see things coming back to normal, and by what period of time? I'm only talking about the economic activity, not necessarily the risk to the financial system, which we'll talk about next.
Yes, Sanjay, I think yesterday's thing, I would say some of them are clarificatory in nature. It's an extension of 27th March policy. Why I'm saying this, I'll tell you. Because some of the policies actually did not, the measures which RBI took, the intention was something different and something else was happening. So RBI rectified that. Certain confusions were created, RBI rectified that. And the most critical part, I think RBI has cut the rate today. Yes, there is no MPC meeting, but RBI has cut the rate. And this I'm telling you not as a fun, because I mean, not theoretically, everybody knows that policy rate is actually very flexible. When when the liquidity is tight and the bankers are taking money from Reserve Bank of India's repo window, then the repo is the policy rate. But when you have 6 trillion excess liquidity, which Reserve Bank of India says on 15 they got on the reverse repo thing, not netting off, but on the reverse repo it says 6 trillion. So when you have so much of excess liquidity, your policy rate is actually the repo at which the reverse repo at which RBI sucks out the rates. So in that sense, India's current policy rate is not 4.5%, it is 3.75%. So this is the biggest takeaway from today's policy. Nobody is probably saying that. Actually, we have seen a rate cut. We have seen a rate cut, and policy rate in India is 3.75. Now, why has RBI done that? It's a sort of disincentive to banks from keeping their excess money in Reserve Bank of India repo window. Instead, you go and lend. No, that's all RBI can do. No, RBI can't just push you, take you by your collar and just ask you to jump into the sea of credit. They're not. But what they have done is basically disincentive for you to keep the money with RBI because you will get lesser amount what you are getting, lesser interest. So that's one part they do. Second, I'm seeing the two clarifications what they have done. One clarification and one extension. Clarification is this: there's a lot of issues about what's going to happen on the already stressed assets. So somebody is an SMA 0 or SMA 1 or SMA 2. They are restructured, but they continue to be standard asset. Banks do not need to provide for them. Now, those guys who are there in that kind of situation between SMA 0 and SMA 2 up to 29th March, now what happens to them? That was the confusion. And
Correct.
I did a calculation in the last week. I did my column where we found that overall in the banking, in the financial system, such loans are 5.15%. So which means if you don't do anything by September, when the SMA 0 also becomes SMA 2, I mean 90 days, then the RBI, then the banking sector's gross NPAs would have gone up from 9.7% to 16% odd. Now that RBI has clarified, it says as a kind of standstill or status quo, those guys will continue to remain where they were. And it will only get into action after June, whether they are able to pay back or not. So that's a big relief, I think, from the regulation point of view. RBI has done that, which is basically taking it forward, as I said, clarifying with a lot of confusion. Other confusion which created the 27th March thing is this: the moratorium, who gets the moratorium, who does not. So Reserve Bank of India spoke about the banks and NBFCs and MFIs, everybody needs to give the moratorium. What does that mean? That prima facie, you would think that banks need to give the moratorium to its borrowers as well as to these NBFCs also, which have taken from banks. But RBI kept quiet. So what was happening? NBFCs were or have been giving moratorium to their borrowers, but they were not getting moratorium from bank in certain cases. How did it happen? Not apparently, IBA held a meeting and IBA came out with a circular that this is not meant for NBFCs. There was a lot of confusion. There was one IBA FAQ which was not signed by IBA, which did not speak about that. Finance Ministry picked up. Finance Ministry FAQ also spoke about NBFCs are entitled. Later, IBA came out with a signed FAQ that no, NBFCs are not entitled. So that created a lot of confusion, and RBI kept quiet. The RBI was under pressure to come out with FAQ, but RBI never came out with an FAQ. I understand RBI was not explicit, but it was implicit that this moratorium is only meant for real sector, which means the borrowers, not the NBFCs and MFIs and all. And the TLTRO, which is 1 lakh crore they are giving to banks, that was apparently meant to be given to those NBFCs and MFIs in the form of bond and CPs and CDs. But you have noticed that who took the advantage? Who took the advantage? The triple rated companies and public sector. So Reliance has gone into market, Tatas have gone into market, and many public sector banks have gone into market, and they grabbed the TLTRO money from the banks. And banks are pretty happy because they are giving money, keeping a cool spread of 3-4 percentage point, 3.5 percentage point on that. So that bit Reserve Bank of India rectified today. I'm happy that governor took note of that, and governor said that now they are coming up for everything like lockdown 2.0, similarly TLTRO 2.0, which is 50,000 crore and meant only for NBFCs and MFIs. So there's a regulatory relaxation today happened. There was a liquidity relaxation in terms of NBFCs and MFIs that happened. And on top of that, there's a rate cut happened, which I call it rate cut. RBI will not officially call it because there's no MPC meeting. And I think repo is the policy rate. But as I said, in a liquidity flush situation, reverse repo is the policy rate cut. So there's a rate cut. And this will discourage banks from parking excess money with RBI and instead go and lend. The question is, who wants the money? Who needs the money? That's the thing. And that is where I think it's not clarity. I'm not very sure anybody would take a call on investment scenario today. I think it's a question of, you can see the first quarter is has gone down the water. I don't see anything happening in April, May, June, because by the time we'll get up in June and things will get settled down, etc., etc. So I don't see any kind of big credit growth in terms of in the first quarter. There will be in the retail space certain things, and there are a lot of like people are saying, I don't know, these are all anecdotally. At the US, we are seeing that there's a sudden spark in car demand because you would prefer not to have public transport, like Ola, Uber models will be under threat, and rather you will go for your own car. Now, do we see the same thing in India? Do we see people are buying cars and people are buying two-wheelers more for their to travel on their own, because this scared of virus will continue to haunt us at least for quite some time. Probably we'll see more selling of those kind of things will happen. But I think it's too early to say that economy is back on the rail and credit growth will happen tomorrow.
Sure. Yeah. So I think that was again very interesting observation. I think your if I remember, it was your column last week in Business Standard that started this whole concept of delay of NPA norms to be relevant. Otherwise, we are entering into a potential volcano just in a few
Yes.
months. And I think and you put the numbers out there, and I think they're clearly been evaluated and acted upon. So I hope you continue to do that and keep kind of flagging off the risks that are continuing to arise, because this is by no means an easy or a job done at this stage. We will need number of different actions. So my next question is on. Can you hear me, Tamal?
Yeah, I can hear you.
Okay. So my next question,
I can.
Yeah, great. So my next question is, you talked about the moratorium being not clear. NBFCs, I think, still remains somewhat unclear, though there is a new window that is coming up, but how effective that will be. The IRAC norms, while they seem to help, I think obviously one needs to see the fine print of that, but definitely steps in the right direction. What do you see are other, if any, potential solutions, and what are the risks to the system at this stage? The first level risk, as well as potential second level collateral damage of whatever solutions that we are coming up with today, because right now facing the crisis is the most important, and there may be certain things that are building up which may come later, may not be relevant right now, but would be good to know.
No, Sanjay, one thing is, there's essentially, I think we need to be watchful about retails, because what we hear is the kind of job losses happening at various levels. Not in the US. US, I think, it's a huge in percentage term, more than 10% now across the job loss. We don't see that, but here we are seeing 2-3 things. One is this job loss, which is less at this point of time, but more is salary cut, which is between 10% and 30%, depending on which packet. I have not heard more than 30% till now. And third is some of the organizations are asking people to go on furloughs. They call it 6 months. You stay away, your medical benefit, medical insurance is taken care of. And you are allowed to look for jobs somewhere else, but you are on a payroll, but I can't afford you. So these are the people, I'm talking about the metros. These are the people have taken auto loans. The people have taken home loans. I personally know at least 2 of them home loan. And if it continues the trend, hopefully it should not, but the reality is it is probably, because rules of the game will change for certain industries, whether it's hotel, whether it is travel tourism, including my industry, media. You will find that kind of things are happening. So this is one area I think the banks need to be watchful about. On the retail side, what's the kind of happening down and all. That's one part. Second is, I'm not talking about the investment scenario and how this, the large corporates, how do they behave. So this will pan out. About now, China will not be the only the entire advantage already done something. So can you do certain things? So those are the kind of things that are not the positive side. But the negative side is, as I said, even urban unemployment, job losses, job cut, salary cut, temporary job loss. These will all impact auto loan, home loan, credit card loans, and personal loans, so on and so forth. There will be impact on the burgeoning startup industries, because many of them cannot afford to keep their employees. Even though Prime Minister has made an appeal that don't cut their salary, don't engaged with conversation, I find that.
Yeah.
So there will find again the problem. And of course, the hinterland, the entire MSME and SME, those area which is essentially the microfinance and micro loans. Now, I'm not saying that they will take advantage of that, like a home loan waiver kind of stuff and all. But getting back, for many of them is becoming a cultural issue. Those laborers going from different parts, the way it's a nightmare for them. So willingly they will not turn into defaulters, but culturally they are not Nirav Modi or some big guys who will flee the country with money. But it will not be easy for the entities actually. They again I would say they need to reinvent the wheel, how to treat this kind of thing. So it's not a very happy situation. I think things will pan up, and at least we need to wait till the first quarter ending June.
Sure. So
These are the pockets of
Yeah, no, absolutely. I think I was reading a survey of MSMEs which said that 70% of them have not paid salary in the month, on the 7th of the month, as was expected. So it's a very, very, very large problem that we are going to be faced with. Let me take a couple of questions now from the chat window. And if we have time again, I'll come back to one of the questions that I have. So this question is from TC Meenakshi Sundaram of IDG. And his question is about whether, with the steps taken today, is it going to be sufficient to kickstart the economy? And one of the variable here is also the leadership transitions that is taking place in private banks. Few have already happened. So there's new team effectively, like in some sense, Sachin team getting replaced by a Virat Kohli team or whatever across a range of banks. Risk avoidance is going to be at the center of everyone's strategy. So how do you really reflect the economy in this scenario?
No, so is this enough? What the Reserve Bank of India has done, definitely not enough, and the governor knows that. So, which is why he has said that, look, he has said that this is not the end of it. This is not the end of it. We will do more, and he clearly ended saying that there is space. So, I can see more rate cuts. I mean, when I say more rate cuts in the conventional sense, repo rate cut, so which is 4.5 now, it's coming down anywhere to 4% or wherever it is. So definitely there will be more action from the Reserve Bank of India on the regulatory side as well, because if you see that direct norm you are talking about, it says is a standstill clause. Now, if I was on SME 0 or SME 2 or SME 1 till February, and if I have not been able to work in this March, April, May, then suddenly where do I get money in June and give you the money and regularize the account? So there will be an extension of that only. I mean, I can't be just, I was not paying unless I was one of the habitual guys. I had my cash flow but I decided not to pay you. So now I have no choice but to pay you. That will be some percentage point, but there are many guys who have their cash flow problem and all. Particularly if you see the MSMEs and SMEs and all, I mean, they are one of the big problem is even the government. They don't get their money after supplying stuff on the right time. And all the banks go to the so-called Tandon and Chore committee, which talks about 3-month window, but they don't get their money to within 3 months, etc. But that's a separate story altogether. So it's not what we have seen. It's not the last of the not the last of the policy measures. We will see more, and I think with the government also will come up with certain measures in terms of fiscal situation. I mean, in terms of fiscal support, because nobody really cares about where is the fiscal deficit going, unless it's gone into double digit. That's a separate story altogether. But I think there's a leeway at this point of time. Nobody cares. I mean, you should not be scared about what rating agency will do. Would India lose this investment grade? Certainly not. If we can do some spending on the fiscal side, and we actually come back on the growth path, then there is no question of bringing us down the rating. And if you see all the agencies, World Bank, IMF, and all, the India growth is relatively better off than other countries. So that's the positive part of it. I am really not qualified to crystal gaze how it will pan out and all. And I don't think also the equity market is a reflection on a barometer of how are things happening. They're all different stories. I think we need to wait and watch. But because again, on the COVID side, how deep it will go, because we are not done till now. We have not done enough testing. We have started doing some testing. Kerala has done a fantastic job, everybody says. But in certain state, I am told that in one particular state, I will not name that, there's a lot of this particular state is hiding. There are people dying, but they're not recognizing it's COVID death. They're giving some other tag of asthma and heart disease. Ultimately, people die of heart failure. So you can call every death is of heart failure. So those are the kind of things that are happening. So we need to figure out how things pan out. Only thing I can say, it's after, I mean, today's RBI measures will be supportive for financial sector stability. Will encourage banks to give lending, to lend. And where do they lend? That question, and where are the borrowers? I think for that question we need to wait at least till June. Till things pan out. I think for the time being is now is just how to stay afloat and how to survive the crisis.
Sure. I think you're absolutely right. I think the credit transmission is going to be one of the biggest factors to watch out for. I mean, what all these big measures do is to create the right incentives, but whether that actually leads to credit where it is required to restart this whole thing, and that may not be till June, right? That may need right from April.
At least.
Yeah.
At least, yeah.
So that I think is a key point. I also asked a separate question in that, and maybe if we can take another 5 to 10 minutes more. I know we had given a time of 11 to 11:45. Is that okay? We can continue for 5 to 10 minutes more.
To 12 we'll close. We'll close at 12.
Yeah, that's fine. 12. Yeah, okay, perfect. We'll close before 12. I'll also show the slides that some of the people have been wanting to see. Yeah. So hopefully all these transitions happen at the right time, and because this is really a very critical time, and getting all those lined up properly is critical to get this whole thing going again, right? It's a very, very, very unusual time. So let me just shift to another question from Rahul Renamikar of Acquis. This is potentially another slightly controversial question. How do you see the states complementing the center's effort to put the economy back on track?
Sorry, Sanjay, I missed the first part.
How do you see the state's efforts complementing the center's efforts to put the economy back on track?
No, I think all
different
the
states obviously are acting in different ways and with different plans.
No, absolutely. If you look at the states, Kerala has done a fantastic job. I'm not going by the number. I'm aware of the efforts. They were much ahead of every state, because Kerala has huge exposure to the Middle East. I think every Kerala house has get some foreign exchange every month, because either son or son-in-law, nephew or son or father is overseas, particularly in Middle East. So Kerala took a massive initiative, and the best. But the other states are doing on their own. There are some quibbling, like the CSR. If you give money to Prime Minister's relief fund, you get the CSR, and if you get to the Chief Minister's fund, you don't get CSR. And there have been talks also. The center is not coming out the kind of fund release which the states do. They are doing on their own, so on and so forth. But fortunately, I think this is the kind of situation where everybody appreciate. There are minor skirmishes between parties and state and center, but everybody is on the same page. Everybody has accepted that it's a very, very serious situation. So we need to work together. So in that sense, I think there is camaraderie. I mean, there are some TV bites they need to give that I'm doing better, I am not happy with center, so on and so forth. Delhi is a classic case again. There was first the blame game that particular Majlis happened with the Delhi police between Delhi police, which is run by the government center, and the state administration. But I think this is past now. Everybody realizes the fact this is not a life-changing, this is a world-changing move. Which is basically, even I myself pitch, is it a science fiction we are watching? Is it true? When I take my dog out in the evening, because the dog walker cannot come, and all the Mumbai roads are completely empty, and this fellow can go anywhere he wants. It's a complete out of science fiction. So I think everybody realizes the fact that this is a moment. I mean, this is something. It's not light. You have to take it seriously. It's a survival of the nation, survival of the world. So that has come out. I don't think there's any infightings anymore. So it's a very collective effort, and we are also we can always debate should the lockdown be. There's always scope of improvement. We should have been prepared, all the laborers to pack them up before the lockdown starts, etc., etc. We can do that, but also we need to accept the fact that we were stricter than many other countries. We went for the lockdown ahead of others. The challenge now is those who are locked down, how to reach out to them, give them some money and give them food, so on and so forth. Because lockdown for you and me is fine. We can watch TV and Netflix and do our work on computer. But if you are too many guys in one room and you don't have the food, then the choice is between do I die of starvation, which is for sure, or do I go out and take a chance that COVID where I may or may not die? So if we don't do that, I think that choice people will start exercising. We'll see social unrest, we'll see riots, so on and so forth. Some bits and parts we have seen, but fortunately this is not rampant. Fortunately everybody is sensitized, and everybody, I mean the police force and I'm not talking like a politician, I have no business, but I'm seeing that the health workers, the police force, I have in my family. it's salute to them. The way they are, the media, the way they are working at this point, I'm getting really emotional because I know in my relations also people are working like that. So it's an amazing face of humanity, I would say. At somebody in New York said, I put it on the social media. Somebody in New York who runs a few stores, he says that I don't want to be the richest dead body in a graveyard. So he's asking people to come and get free provision from his stores. So that's the approach. I think all of us will look at life in a very different way post this period.
Not able to hear you, Tamal, actually, but
I said all of us will look at life in a very different way in this post-corona period. Hello. Hello.
Yeah. Go ahead. Yeah.
No, that's it. I don't want to.
It blanked out a bit, but yeah, I think
I said
we all
all of us
appreciate.
I said all of us, or many of us, or most of us will look at life in a very different way in the post-corona period.
Absolutely. So I will ask you one final question on that, on what you are doing before. But before that, just one formal final question. You talked a little bit about technology at the beginning and fintech and so on. obviously, Governor also talked about in the first press conference, the last word that he said is that stay safe and go digital. And you mentioned about demonetization and this being another, huge potential change in behaviors, in solutions, in the way the entire financial system changes as a response to this. So do you see it being relevant to restarting the economy as well, in terms of how the tech and the fintech kind of will play out?
No, absolutely. I think it's a much more stronger push than what happened in demonetization, because demonetization was a localized phenomena. That's an Indian phenomena. That's point number one. And point number two was there was a lot of sensitivity about it, and lot of different of opinion. Do we need it? Don't we need it? So on and so forth. But here, this is a global phenomena, and everybody is uniform in their approach what is to be done. So social distancing will continue to be in the near future. I think even the planes will find they will reconfigure the seating arrangements. The hotel, everything will go. So the bank branches also, I'm just sure about this. Things will change, and people will be on their own. I think the difference will be, earlier it was force people. The customers were being cajoled to get in. Now customers on their own will get in there. So that's the difference. And it's a global phenomenon. As I said, it's not, nobody is forcing you to do that. You have to do it on your own, for your own. It's a question of it's not a question of convenience anymore. It's a question of survival also, to some extent. So that's it. It's a very different world, and definitely technology will leapfrog in that's a offshoot of this positive thing of this phenomenon. Yeah, we'll just 1 minute more. I have one.
True. Absolutely. I think that's absolutely fine. I think this last comment, I think being digital is being safe, is what you're saying, essentially. Great. Thanks. I think hopefully we'll look for a bestseller coming out soon out of this, and we'll all look forward to. Thanks, Tamal, for a wonderful conversation, a great discussion. Really appreciate your taking time to answer our questions, and hopefully everybody on the call found it interesting. We did take some questions. Some questions we were not able to, but please do send us, and we'll try and get Tamal later on to respond as possible.
Yeah, sure. Thanks, Sanjay.
With that, we can close this. Thank you all so much.